Hello and welcome to Unblocking the Chain, where we delve into the intersection of traditional finance and digital assets. If you're curious about how these two worlds collide and what it means for your investment strategies, you've come to the right place. I'm Michael Prentible, and today we're joined with JellyC Chairman Drew Bradford. Welcome, Drew.
Thanks, Michael. Good to be here.
And we're also joined by Chief Growth Officer of the Redbelly Network, Tim Bass. Welcome,
Thank you,
Tim.
gentlemen. Great to be here.
Good stuff. So, Tim, we're going to discuss the Redbelly Network today, and we're going to dive into the deep spaces of what's happened.
Yep.
Very exciting. The Redbelly Network has IEO'd recently on December 17th, and there's a lot of excitement about the network. So, we're just going to give our listeners a quality assessment of what's been going on. And let's start with a bit of a description on the Redbelly Network. What is it?
Yeah, well, it's quite a few layers to this answer, actually. But at its core, Redbelly is a blockchain. So the actual underlying technology was invented in the University of Sydney and CSIRO back in 2016. It was invented by a professor, Vincent Grimoli. And he was trying to build a better consensus algorithm, a better blockchain, after looking at the competitors. And after a lot of research and a lot of building and designing, they ended up building something that was extremely novel. So my previous business, where I was the CEO, was a company called Block 8. We're a venture studio in Sydney, and we built a bunch of tech and invested in a bunch of early stage projects. And we approached the university and the CSIRO, and we did a joint venture. So we brought the technology and commercialized it. And since then, we've been building ever since. So since then, it's become a network where real-world assets can be issued on-chain, and retail and sophisticated investors can buy these assets anywhere around the world.
Yeah. Okay, so you also have the backing of the DFCRC.
Yes.
To me, it feels like there is definitely a positive government involvement with the Redbelly Network. Can you elaborate a little bit on that side of it?
Yeah, definitely. Look, Australia is, a highly educated and wealthy country. And so there's a lot of incredible inventions that get, created in this country, but don't necessarily get commercialized as well as they should. So, the DFCRC is an important partner because they've got a mandate of commercializing and supporting these types of projects at an early stage. There's quite a bit of funding and brainpower and academic support from the universities and institutions that go in behind that. And so even for us, we have the CSIRO and University of Sydney on our cap table. They sit on our board. So they're very much interested in us, taking this technology to the world. To give you an example, the CSIRO invented Wi-Fi many, many years ago. And it's done quite well, but you would objectively say it probably should have done a lot better for the country. So I think with Australia being who we are, we want to make sure that we're inventing globally leading technology, but also, taking that to market in every jurisdiction. So all of these players are behind us and supported us quite a bit. And it is nice to have those logos behind you and pushing.
Wi-Fi, Redbelly Wi-Fi. I like the sound of that.
Yeah.
This sounds like there's some good value there.
Yep.
So that is absolutely great to see from the Australian government. We haven't been historically great at supporting, new tech in Australia. You look around the world, it's mostly the US. Europe's a laggard. It's great to see that backing from the Australian government.
Yeah, for sure. I mean, obviously, we generate some very good tech companies, but they're, very sort of traditional SaaS-based or product-based companies. So to build a, deep tech business into a global platform or network is, pretty ambitious. So we're here for it.
Yeah.
Good to see.
So let's take it back to basics.
Sure.
Give us a sense of, for the viewers or the listeners out there and the viewers, the YouTube viewers out there, give us a sense of what are the benefits of using the Redbelly Network?
Yeah, so I mentioned some of the deep tech stuff, and to give you a sort of sense of how impressive this technology is, when it was invented, and even today, Bitcoin can process roughly 10 transactions per second. And so anyone who's used Bitcoin will know that it's an impressive feat, but it's kind of aged quite quite badly in terms of keeping up with the use cases that now run on blockchains. So even I think it was 6 or 7 years ago, Redbelly was already doing 660,000 transactions per second running the Bitcoin algorithm.
Very impressive.
Across 10 different continents or 10 different jurisdictions across the world in AWS. So
somebody stop me.
very fast, quick. Very impressive. And so what makes it also super novel is it's a collaborative consensus. So unlike other blockchains that are competing for the next block, in Redbelly, every block is proposed, if it's valid, at the end of a cycle, and they are combined into a super block. And so this means that everybody actually adds performance as the network grows. So we want a more collaborative and a more scalable approach to reaching consensus, which is quite difficult to do at scale. The other thing is two very important things was that it's the only blockchain in the world to achieve what's called formal verification. So it's gone through a number of rounds of review and academic research. And what that means is it's been model checked to be correct, so mathematically certain to commit a transaction at the end of each block. And so that means it's deterministic and it's final when it proposes a valid block. So for real-world asset use cases, when you're tokenizing billions of dollars of debt or private equities or real estate, you can't have a situation where there's a fork like most blockchains have this. And even if they converge, that split brain creates massive issues like rollbacks and uncertainty about payment and escrow and trust. And so these are things that, have really stopped institutional scale deploying on blockchains. Yep. So at the technology layer, it's very impressive from that standpoint. Since that stage, we've built the Ethereum virtual machine on top, we call it the SEVM, and it's a more scalable version of the Ethereum virtual machine. And to give you a sense of speed on that stuff, Ethereum does 10 to 15 transactions per second as well, not a lot, and we are seeing about 25,000 transactions per second running the virtual machine. So it's by far the fastest blockchain in the world.
Okay, so that's testnet, or is that on the mainnet?
No, mainnet.
Okay, and so you're doing that at the moment?
Yes.
Wow, that's fantastic. And what do you think the capacity is? What's the upper limit?
Well, our biggest constraint is actually the virtual machine. So being an open sourced technology, thanks to Ethereum and the team there, the world has adopted that because we want the tooling to be standard for all of the dApp builders, so they can run an application on Ethereum and directly port it to us and get scalability and performance and all the things I've just mentioned. So there's a lot of optimizations that need to be done in the EVM that are actually holding even the fastest blockchains back.
Yeah.
So I won't steal Vincent, our CTO and founder's thunder, but he's got some very big plans on that stuff.
Okay.
It'll just get faster.
Good. Yep. We like that.
Well, okay, so part two to this.
Yes, exactly. I know. Exactly. We can't cover it. Can't cover enough. So we talk about the blockchain trilemma.
Yes.
We've discussed the speed, and there's no doubting that Redbelly is very fast. What about the cost per transaction?
Yeah, well, so this is another big deal. So another reason why businesses haven't deployed on blockchains at scale is they don't know what their marginal cost is.
Yep.
When a network like Ethereum or many blockchains gets congested, the price of gas fees goes up proportionately to incentivize miners to prioritize those blocks or those transactions. And in our case, what we've decided to do is we've locked the smallest transaction you can do on a Ethereum blockchain or EVM compatible blockchain is a transfer from one account to the other. So a simple sending ETH from one party A to party B. And so that's 22,000 gas units on the EVM. So we've set that to $0.01. So that you actually know what your default unit cost is in advance. So if you're building a use case that's doing on-chain transactions and you say, well, like a transaction is 1 cent, but I want to do a zero-knowledge proof or some complex swap, that might be 6 cents or 7 cents. So you can multiply your unit costs in advance and set your pricing so you know what your margin is. And so this is very important. It'd be the same as how much you spend per hour in your cloud services, and you build your SaaS business on top of those costs, and you know what to charge your customer. So it's a very scalable way of doing business, and underappreciated.
We
Yeah.
want what? Sorry, Jay.
No, I was just going to say, because, like the Uber surge pricing that you've got with Ethereum, you sort of don't know what it's going to cost you until, you're down there and using it.
Yep.
And, you might be thinking X and you're getting 8X or when you go to transact. So
I experienced that this morning, Drew.
We won't talk about the order of transactions because we'd probably go down the rabbit hole with that particular conversation. What about the security of the network? So polishing off the third part of the trilemma.
Yeah. So, I mean, the security is, that's a part of the formal verification that we've achieved. You actually prompted me. We actually just achieved a patent in the US, which took 6 years. So that was the other novelty that's important. But there's a number of levels of security. Obviously, the most likely sort of attack angle on any blockchain is the private keys. So we want to make sure that particularly our issuers, our asset issuers, and our partners are using institutional grade solutions. So we've also partnered with Fireblocks. They provide a bunch of custody and sort of operational control compliance solutions for these partners. And then we have many people who use whatever wallet they like. So there's actually sort of a very careful positioning with our corporate customers to make sure they've got the right partners, so they're not using a MetaMask, directly, because that's a bit scary. But in terms of security, like I said, the formal verification is mathematically proven. So if there's any risk to assets on our network, it'll be a particular user loses their private key, or a particular asset is being transferred off the network and purports to have it on the network. So just like in traditional TradFi, the actual risk usually is operational outside of the network. But no, we've built a rock solid security stack, that's for sure.
Okay, that sounds good. I won't go into certain elements of the security, like running of the nodes and all that, because I assume that is going to progress as the network develops, and you'll have decentralization on that side. Just briefly on that.
Yeah, look, I probably should have said this before in the last question, but Redbelly Network has a level of accountability and verification at the base level of the network. So all of the users and businesses that join the network either do a KYC or a KYB. And so there's a level of comfort there that there are no bad actors, or there's no one sitting on an AML list or some sanction list. And so this sort of concept of clean liquidity gives a lot of people confidence that this is a sort of a very sort of clean and trusted starting point. And I think that helps from a security standpoint as well.
Yep.
But all of the nodes, for instance, are KYB'd as well. So they're not anonymous state actors. Yep. And so if they're going to be, participating in consensus, we need a level of trust there as well. So accountability is sort of, you get that for free on our network. Yeah.
Right. Okay, we've been going for almost 15 minutes, and I know there's a lot of punters out there that want to talk about the token.
Sure.
Okay, so let's just briefly talk about December 17.
Yeah.
It launched, traded at 5 cents for what seemed like under a minute. I was watching the price action.
Yep.
A number of transactions went through, and then all of a sudden it burst through and bang, up to 90 cents. Down to, let's say, 15, up to 48, and now it's drifting back off. What are your thoughts going forward in terms of demand for the token?
Yep.
Give us a little sense on that.
Yeah. Look, obviously, I'm going to be careful when I talk about price, but it's important for the audience to remember that Redbelly, or RBNT, Redbelly Network Token, is a gas token. So you need it to power the network. So, if you look at the usage on our network, it's been quite impressive. We've only had mainnet for a couple of months, and we've processed several $1 million of transactions on our network. So there's a lot of demand for that, and you need to spend that as gas, like you do with Ethereum, on our network as well. So what we're super focused on, particularly on my side of the business, is helping our asset issuers move their Web 2 business onto the Web 3 network.
Can you give us an example of that, Tim? Could you share with us one of your users? And
Yeah. definitely.
And how they're using the chain.
Other than JellyC, of course.
Of course, JellyC. We love
We'll
them.
come to that later.
We love them. Well, there's one particular partner that's just deployed just over $300 million of assets this week, actually, and their name is Hutley. So Hutley is a residential leasing platform. They process, almost 40% of digital leases in Australia. So in terms of real estate sort of tenancy agreements, they're one of the biggest, if not the biggest. And so what they've done is they've essentially tokenized the rental agreements on the Redbelly network and the management agreements. We call them the rent roll, which is generally handled by over 4,000 property agents in Australia. So what does that mean? Well, what it means is that their current business has a record of who owns what when in a database, right? But by moving these assets on chain, you can position them as digital assets, and you can show the actual rental payments flowing through the actual digital assets on chain. And so this creates, in the case of Hutley, they've turned these assets into debt instruments. So you can effectively be paying down debt with payments from the actual lease. So you can then use these as collateral, or you can use these as sort of digital proof of payment. And it's a very interesting market because as a wholesale product, you can even then tokenize or securitize these and create bonds and things like this that, people can get access to. It's very much, where we want to go in terms of our sort of go-to-market, structured products, bespoke issuers having bespoke offers. And these sort of tokenized assets are the foundation for those assets or those offers. But to go back to your question, you need the Redbelly Network token to commit transactions. So each of those payments requires a little tiny bit of Redbelly token. So, the same way that, many cloud providers used to have credits, right? Ultimately, that's just a proxy for cash. But we, are very much focused on the network effect of these very large businesses getting, a lower cost of capital, better distribution, creating novel products that, their contemporaries don't have off-chain. So really sort of disintermediating and sort of turning a spreadsheet on its head. Like we really are going after spreadsheets and databases.
So how many transactions would we expect from someone like Hutley over a year?
Oh, millions.
Okay.
Yeah, so Hutley does, I think they do 1 million contracts per year. And many of those contracts are either 1 year or 2 years. So they're constantly new contracts, and even the ones that eventually complete, then there's another one. Someone's got to live somewhere, right? So there's a lot of turnover in terms of these assets.
Yeah.
And then you have the payment flows. So they've done some incredible things where fiat can go through traditional banking on chain. And those payments then are essentially a stable coin once they hit the network. And those digital dollars go through these assets on chain, and then they go out the other side and settle on the landlord bank account. So it's really sort of extending the traditional payment network into a more interesting and novel asset that didn't exist before a blockchain.
Yeah. Okay. So just to summarize what you've just said, so Hutley is going to result in a lot more transaction, which figuratively goes through to more fees for the Redbelly network, which can be distributed either to the treasury within the Redbelly network or to people who are validating the blocks.
100%.
Okay, and that adds to the utility of the token. So there's the demand for the token coming through. It's either through a higher yield for the validators or the stakers, or more demand for the token. Okay, so this is the beginning of the utility, the demand side of the Redbelly network, and it feels like there's a hell of a lot of there's other institutions that are lining up to use the Redbelly network, such as, for instance, JellyC. Okay, so a brief note on that. We're looking to tokenize our funds. And to begin with, we're waiting for an Aussie dollar stable coin. So, to be able to tokenize our Australian unit trusts. We're hoping the good people at ASIC will allow that to go through. But in the meantime, we'll tokenize our Cayman's vehicles, which accept payments in US dollars. And so we can accept USDC and USDT. What that will allow us to do is for investors to, subscribe or redeem to our funds on a live basis. So we'll have a live NAV that'll operate 24/7.
Yep.
Okay, so functionally, it is a big step
Huge.
for for investors around the world. Gives them the ability to be able to transact with one click of the button.
Mm-hmm.
Okay,
Yep.
so it's a big development, and we're we're on the front line in Australia. We're working with Liquid Eyes and Redbelly to get it done.
Yep.
So it's very exciting development. There's an article in the Australian about it the other day. So that's the demand. What about the TVL of
Yes.
Redbelly? Tell us a little bit about that.
Yeah, so there's a number of things that make up this term, right? So TVL stands for total value locked, and it's become a very sort of standard way of measuring assets on a blockchain in the Web3 space. It actually means being locked for the purpose of another thing. So if you take Ethereum and you take USDC and you lock it in a automated market maker like Uniswap, that becomes TVL because it's locked for the purpose of trading, right? So there's a journey for all of our asset issuers to get to achieve TVL. So what Redbelly has got is over $70 billion of signed contracts with issuers. And so what they then do, and this journey is I've touched on it earlier, is they need to extend their business on chain. So they usually have to think about the wallet solutions, security, which platforms, how are they going to tokenize it, how are they going to license it, how are they going to offer it. And so the first thing we need to get is the actual assets tokenized and issued on chain. So a number of our partners have now done that. The next thing is to then lock it into a market or, subject to licensing. You can't just slap that in a Uniswap, obviously, some of these assets. And then it counts as TVL. So one of the things that we're spending a lot of time with all of our partners is taking them on that journey because they have to remain backwards compatible, right? They're existing customers. These are existing businesses. They're not startups. They didn't just sort of start overnight. So we need to give them the benefits of the technology and lock these assets in interesting ways, like tokenizing and securitizing bonds and rent rolls and things like this, for the purpose of offering them under a license to the existing Web2 audience, so they've got better products and better yields and more interesting things to invest in. We've made a huge splash on that stuff. And even this week, we've onboarded another almost $1 billion actually of assets, and about 700 million of that is locked as TVL.
Okay, and sorry, go ahead.
So I'm a Web2 guy.
Yep.
And I want to use our chain.
Yep.
What's the Redbelly pitch versus maybe even going not an EVM, doing a Solana, doing other networks? What's the point of difference for Redbelly versus and who do you guys see as a competing chain?
Yeah, great question. I mean, other than all the tech stuff, which is often not that important to the issuer, we are very focused on winning the best assets we can and bringing those network effects onto our network. So Redbelly already has 400,000 KYC users. And so these are a combination of wholesale and retail users that generally have higher financial literacy than most of Web3's users. So as an issuer, am I going to issue my assets on a network where everyone's anonymous and I don't know who I'm doing business with? And there aren't sort of the same technology guarantees. And how can I compose my assets with other assets when I don't know who they are either? And so one of the biggest challenges other networks have had, even if they have attracted real-world asset platforms and issuers and assets, is they're effectively recreating walled gardens on their networks over and over again. So as a user, I have to KYC with you, I KYC with him, and over again. So that composability, that the sort of promise of instant transfer and tokenization is very much muted on those networks. So what we've got is this concept of verifiable credentials, which is a part of this identity stack that I mentioned before. What it is, when someone joins the network and they're over 18 and they're based in Australia and they're a sophisticated investor, we generate a cryptographic proof called a verifiable credential that sits in the user's digital wallet to prove something without having to re-KYC over and over again. So when an issuer deploys their assets on a network and they say, look, it's going to be a wholesale product, can only be offered under these rules, they can essentially do business far more efficiently with users that meet those standards because they can prove it cryptographically, rather than reproducing a PDF and a bank statement and all this sort of stuff. So we're essentially creating a very important moat around the Redbelly network with these verifiable credentials that an issuer can immediately tap into this accountable and verified audience without having to worry about financing, terrorism in some sanctioned country, because you just don't know where the gas fees from your transactions are going either.
Yep.
So there's a lot of risk there at the board level and at these sort of large institutions. So I think the tech advantages we have, the quality of our assets, the quality of the users that have already onboarded, and the fact that it's extremely fast and the costs are known in advance. You're not going to set your pricing for $2 and then you spend $8 on gas. Like, it's not going to work. So there's a lot of things.
Yeah, you mentioned in Australia you've got plans for globality.
Oh, well, so I said Australia because we're all Aussies here. But no, we have a number of
That's what I thought,
large issuers around the world. And in those examples, it would be, Reg D or Reg S, or, you're a US citizen and you can and you can't do this. And so those verifiable credentials would be different for those jurisdictions. And so what a lot of other projects have done is tried to solve and kind of harmonize all of the securities laws around the world and sort of bed them into their network. We think that's, the real market hasn't done that in 100 years, right? So what we know for sure is that the base level of the network, accountability, KYC, AML, wholesale, retail, if you can at least prove that at the base level, you can let the asset issuers choose which credentials they require, and then they can interrogate those and consume that data at point of sale. And so we think that that's about all you can do across such a global network like us. So we have, issuers around the world that, are building very specific products based on their very specific regional and sort of license-based criteria. And that's why we think we've got, a very big advantage and a sort of a head start in that area as well. Look, I will say, Redbelly's been guilty of being almost too ambitious. We've done a lot of very big firsts, but the project's been built for, nearly 8 years before it got to market. So there's been a lot of big problems to solve. So I would say, a lot of these other blockchains are sort of building it and hoping people will come, but they don't have the assets, they don't have the licensing, they don't have the operational controls or sort of accountability KYC data to give issuers confidence that, am I just going to deploy this on Ethereum and see what happens? And so we think that matters.
I just want to bring it back to the punters once again.
Sure.
Oh, sorry. I just want to bring it back to the punters. The demographics of unblocking the chain are well and truly institutional. However, there is I must see Mena's smiling over there, but we do have a fringe of our community that is under 18.
Right.
And there was a lot of disappointment where, over the last few months when, JellyC is pointing out that we've taken a position in Redbelly and we're saying that this is potentially a blockchain of the future and we see it as being one of our key investments going forward.
Yep.
Okay. Now, the under 18s want to get exposure. Tim, have you got any idea or any way that they can get involved?
Yeah, look, the answer is yes, obviously. So Redbelly is listed on a number of centralized exchanges around the world. It's also on some decentralized exchanges, so people can acquire the Redbelly token. And remember, the purpose of the core utility of the token is to run gas on the network, but it does have a price and people do speculate. So I'm not going to act like that's not a thing. But yeah, there has been a lot of interest in that. I think just like the early days of Ethereum and other very big networks, people want to get in early and speculate on that value. My job is to prove it, right? My job is to make sure we have the most amount of assets, we've got the biggest network effect, and that we're dominating the real-world asset category, and we're well on our way to do that. So I think the crowd can pick and choose how they take that information.
Okay, so just to summarise, MEXC and Gate are two centralised exchanges. Are there going to be any others, or are there any decentralised exchanges which are on the Redbelly network?
Yeah, definitely. Yeah. So we have
they can't participate on that because they need to be 18 and above.
That's correct.
Yeah.
Yeah, that's correct. You did catch me on that. That's right. So we have a rolling listing strategy. So rather than waiting for the perfect listing, environment, there's a lot going on in the space. It's not easy to line 10 different companies to do anything on the same day. We're essentially listing as these exchanges are ready because they need to natively integrate into our network so that we can send Redbelly into the exchange, not via some bridge on Ethereum.
Yeah.
So we also have a DEX running at the moment called RedDex. So that's a Uniswap equivalent platform where you can swap RBNT into US dollars and back again. And they're building a bunch of interesting staking services where people can, stake their tokens and, receive a reward for doing so, which is interesting. Something that I do find quite interesting is this sort of accountable meme coin craze that I keep seeing. So obviously meme coins, everyone loves a meme coin.
Yeah.
But what I'm finding, I didn't expect this, but what I'm seeing in our community is people love the idea that when someone launches a Redbelly meme coin, that there's a level of accountability there. They know they're not going to get rugged.
I like it.
Yeah.
I never thought of that.
Yeah.
Like a KYC meme coin craze.
Yeah, well, we'll see what it turns into. But, obviously Redbelly is going to be tokenized and wrapped and have its token on other networks as well, which are not permission networks. So people can speculate on those wrapped equivalents. But yeah, it's we're about 2 months in now and we're just getting started.
Wow. The Drew coin.
Drew coin.
Who knew?
Or the JellyC coin.
Yep.
What's the future hold for Redbelly? What are the big things that you're looking at for the future?
So where do you see 12 months' time? Give us what's success for Redbelly at the end of 2025?
We will have the most tokenized assets in the entire sector. So we'll have, tens and tens, if not north of $100 billion of assets on our network.
More than Ethereum, that sounds like.
More than Ethereum.
Yep.
That sounds, insane from a Web3 perspective. But, I always remind people that just gold is a $12 trillion. I mean, it's probably more now. It's had a great year. And so that's just one asset.
It's closer to 20.
20, there you go. It used to be 12. Wow. So just gold is $20 trillion. And so, a small fund, BlackRock's, trillions as well. So with a level of comfort and confidence, these asset issuers will be deploying at scale at significant sizes. And so we're very excited about that. We absolutely want to be seen as the default RWA chain. There are a number of networks that are sort of doing everything, meme coins and DeFi and gaming and metaverse. We're very clear about what our go-to-market is, and our customer is the asset issuer. Not to say that other cool things don't get built on us. That'll be great, and that's fun, but we're very singular in what we're out there to achieve. And in 12 months, I want to see a number of structured products. An example that sort of is an accessible example would be, imagine taking a wrapped Bitcoin and combining that with a tokenized treasury bill and a government receivable and composing that into a new product that an issuer can issue under a particular license. And so this is something that as an investor, either retail or wholesale investor, I'm very interested in because I can have a portfolio of things with, some directional risk and a yield, and these sorts of things, are very hard to find and even harder to keep track of in a spreadsheet. So we really want to see a composable real-world asset network of incredibly strong assets.
Yeah.
And so when you have strong assets, you attract more liquidity and you attract more users, and the flywheel continues. So we're feeling very good about that. We've got a number of unannounced, very big unannounced partnerships that we'll be doing very soon. We're going to have a cracker.
We're waiting for Katina to launch the stablecoin, which will open up a hell of a lot.
Yes.
Including what would be a decentralized, regulated Athena type product out of Australia.
Nice.
April the 1st.
April the 1st.
I like
I'm
that.
liking what I'm hearing.
I like that.
And hello to our good people at ASIC out there, and we love you all.
Yes, we do.
Okay, so I think we're probably getting towards the end of our session. Tim, it's been an absolute pleasure having you.
Thank you.
Drew, always good to hear from you. the
Thanks,
wealth of
Michael.
experience.
Thanks, Michael. No, it's great, and it's actually really, really exciting. When you brought up the whole Wi-Fi thing, and I was thinking the CSIRO, Sydney Uni, my alma mater.
Nice.
It's great. It'd be great to see some good Australian tech going global.
Yeah.
I
We're
mean,
doing
this,
it.
this is one project that I feel like Big Kev because I'm excited. And in saying that, I think we should end the session.
Great.
Thanks, Tim. Thanks,
Thank you
Drew.
so
Thanks,
much,
Tim.
guys. Cheers.